Okay, buddy, welcome back. And we started on took my first break late, so we'll be taking the other one on time. So it'll probably just be about 20 minutes, and or actually a little bit less than 20 minutes. We'll be back on break again. So I missed that. So let's go on and move on in. So we finished up the cable here. We'll go into the Aussie dollar. So our support was 74.30, resistance 76. We're looking for the market to break lower. It has been playing out. You see here, although you have to look at it. It's as the story we were looking at. We were talking about the story, and they're on holiday mode. So you have to be within reason as to how far they want to push them lower. I haven't traded the Aussie in a long time, but we did get almost two back-to-back little hammer bottoms here on the 2-hour chart. So it's opened the door for this market to move higher. We had talked about a good place to put on shorts before was the 76.72. I mean 75.72, and we did see the market sell off, then come back and take that out, then turn around and sell off again, try and dip a little bit lower, and I think it will eventually in time work lower. But like I said, you got to respect that they've got two hammer bottoms here, and it's holiday period, so people aren't trying to go and push this market too far, and it's not holiday where we get like major holiday like the States or anything. Not the States, but I mean like a Christmas holiday or whatever, where it's going to be so thin that they might just push things way out of whack. It's just going to be a little bit thin, and usually in a situation like that, people aren't going to try and press things too hard. So we got down there and got two hammer bottoms, and you got some people covering their shorts. Especially going into the weekend, anybody who's short, they might just say, you know what, I'll just take it off the table and restart again come Monday, and I have to worry about what happens over the weekend. So going back here, we talked about 76. Well, for right now, we'll adjust it. Resistance now on a very short-term basis is going to be right here. Which would be 75, 74. And we'll leave the market off. And then support, we've already talked about that. Was I thinking is it 74.30. We're going to go and leave that there for now, where it could go in and break to. You'd look here for a little bit of support right there, but where they can break to, I think we're going to still stick with that 74.30. So we pull this back. And that's where we're going to move this over here. There's our 74.30. Overall, I think they're going to have to work lower. We talked about that to give it a little bit more of a better look, or look at things in perspective. We talked about this being a beat up cup and handle. Actually, this is more looks like where this would be the top of the bowl, and I guess the handle. Like I said, I'm not a cup and handle aficionado guy, but when I looked at it, I said, okay, well, I'm gonna go with this, that being the top, and projecting that for 75, 72, which we got. I mean, it missed that target by 3 pips before we saw a pullback. Then we reasserted, and we talked about this, because remember there was a 61% here. So we thought, God, it could even go even a little bit higher, which it did. We're trying to break down, but we've broken down. We pulled back a little bit. I want to say broken down, but certainly we've come a long ways. And one of the things that's been fueling this, as we had talked about over the last prior 2 weeks, is that they've had 3 back-to-back months of strong coal sales. So, and then you just saw, we talked about it this morning, their export sales have been, really doing really well too. Let me see here. Let's take a look. what we talked about, as I mentioned, I thought that I was going to mention in this story, maybe it was yesterday. But anyway, there, besides the coal sales, which have been very, very strong. Oh, here it is. It says, also encouraging was Friday's data showing a 12.4% surge in Australia's export prices. So that's what I'm saying. And that's on the backdrop of, like I said, back to back to back strong coal prices, month to month to month. But so it's not like they're going to give up the ghost anytime soon necessarily, but I think we have to pull back. And I think before it's all said and done, we'll come back to the 74.30. We'll see at that point. But anyway, we already, so we've got 75.74 in the short haul, and we'll stay with our 74.30 on the support. So 75.74. Because even though they had a strong surge in strong 12.4% surge in export sales. We've had the back to back to back great exports of coal. The point is that this, then people are going to say, like I said, you have to look at things. Well, the way I look at it, I think the market kind of looks at that at this point also. You have to look at this sense. It's like, okay, so it's already rallied this much. The same thing would happen with gold, although I don't think it's the same situation. But it's like, okay, what's going to spur more buying? We already had the back to back to back strong coal sales. Today we had the 12.4% surge in export sales. So what's left? I mean, you kind of have to look at it when the market gets this way. You have to look at it kind of like, now, what are you going to do for me now? It's like, well, God, we haven't done enough for you already. Look how far we've rallied. But the market's going to look at it. What are you going to do for me now? But you have to look at it in the sense that what will take it? We got a 12.4% surge. So if you think about this probably should have rallied up and taken about 75, 74. You see what I'm saying? So even though they got the 12.4% surge, the rally is, I wouldn't say necessarily minuscule, but it is very slight. And that's on the backdrop of great news. So that's what you say, well, wait a minute, maybe we've come too far, too fast. We're going to have to go back lower and do some homework. The outlook looks bright going forward, but we're going to have to come back here to pick up some new buyers. So we're going to have to back up the truck, put it in reverse, and then they'll pick up some new buyers, and then we can go forward. Rod says he agrees. Yeah, I think Rod's been trading the Aussie. So anyway, so that's why you have to kind of look at it. One of the things that helps when you're trading, if you look at things in analogies. So I'm saying if you look at it, well, we got to this level, and this is a support, this is a resistance. Why would it go higher? The trend's up. Well, yeah, the trend's up, but I'm saying is, holy smokes, look how far it's gone. It's like the gold. Remember, we talked about eventually maybe getting to 1220, and it got there much sooner than I would have thought. But at that point, the gold never gave anybody a chance to get on the train when they jumped off. So it's like, wow, who's left to buy now at 1220, or 1215 or 1210? There wasn't. That's why we saw the big pullback in gold, once again, even much further than I mean, the 81 was where we were looking, but I didn't think it was going to come so fast. Well, it's kind of the same thing in the Aussie dollar. So it's like, well, what are you going to do for me now? Well, I mean, we just gave you the 12.4%. I know, but what are you going to do for me now so I can stay long on that? So, well, we don't have anything for you right now. Okay, well, then we're going to let the market slide back, and then we'll come back and jump on the train again. So it helps to look at things from an analogy. That's what I do. And then you're more apt to go in and say, yeah, I kind of see that playing out. I'm not going to be a buyer here. I like the Aussie dollar. What a strong trend. The moving averages are turned up. But, I'll be a buyer on a dip. And that will, kind of helps you to look at it, from an analogy standpoint. What we talked about? We did a quick flyby. We really don't cover crude, but I was covering the crude with some people yesterday, and we're looking for 5406. We actually have 5397. We're looking for 5406 as an extension. Not an extension, but well, yeah, it is an extension, 120%, 70%, and sure enough, they made it to 5408. But they sure were having a tough time getting there. But they did go in and pull back. Maybe down the road we'll add crude onto our WizeTrade, but it moves so fast. But anyway, so let's move into the Kiwi, and I'm going to make sure I take the next break on time and not go past. So let's take a look at the Kiwi and see what's going on there. You know, Fridays, it's more of a wrap-up trade for the week, and you project, not project, but we look out towards the next week, you know, where we're going to play out. We talked about that with the euro earlier. Of course, we're going to jump into the Kiwi, don't worry. But we talked about that with the euro. We said, yeah, it came down here. We've been talking about 624, you know, before it's all said and done, we think it may get to 609. If it wants to rally to the start of the week, we think it could push up as high as 732. So even though it's Friday, we're kind of looking out for the next week, saying, yeah, this did reach our area, the 758 we've been targeting overall. After the 716, the pullback, we were looking for that too. So now, yeah, so you said 624, well, what's happening now? Well, it's Friday, some people might be covering. If it starts out the week strong, maybe they're going to make it up to here to 732, but we think overall, before it's all said and done, we believe we'll make it down here to 605. There's a 605 here, and 609 is at 38%. So we kind of have Friday kind of like, we kind of look what happened, but we kind of, I wouldn't say project, but we get an outlook as to where we think some of these moves, if they've come into, I wouldn't say if they come into fruition. Obviously gold did, it made it down to the 1181, but I mean, if we start to see, if we have a fruition of our setup, which I think that we have now with the euro, where do we go to? And I think that's going to take us closer down here, that 605 overall. Doesn't mean we can't start out next week above 107, but I think eventually that's where we're going to go, to 605. So let's take a look at the Kiwi. We were looking at 72, 73. Boy, that was pretty easy, 72, 73. And here's our bias pivot. Remember how we got above the bias pivot? Remember, this is a pattern that we're looking at. Christian says, oh, Rod says, bang on, mate. Christian says, Pauly, check the EWA. The stock market over there is about to break higher on a longer term basis. Oh, that's an excellent point. It is. So that's certainly probably going to go unimpacted. So here's the deal. We were already looking this yesterday, and we said, hey, there's nothing there. It's just something to have to look at. And we did that with remember, with the dollar krona. Remember, we had that head and shoulders, and we said, hey, look, this looks like a head and shoulders. It's not a great head and shoulders. And our prediction was, remember, it was we just hit it the day before yesterday, and that head and shoulders that we were looking at, potentially a head and shoulders, was from 10 days ago. And look, it came into fruition. So this is what we're looking at here now with the Kiwi. Everybody's all bullish now. Well, we got past the bias pivot. I think we can come down here. So now we're going to we talked about this, a potential head and shoulders. So watch this. We're going to do here. And we're going to put it in dots because we don't know for sure. We're just having it there. That's kind of like we did have it, our little projected chart. So we talked about this. I go, if that's going to be a head and shoulders, because we came down here and I go, you know, we said this, you know, that could be a potential head and shoulders there. Potentially, I don't know. And I said, if it does, they're going to fade moves against 72, 71. Wham, bam, thank you, ma'am. How do you like that? 72.65. So I think, like I said, it's not a head and shoulders yet, but it is after a rally, a pretty good rally. We're overdone. We've hit the 78%. So I would look, I mean, if you're aggressive, you could actually be shorting against the 72.50 with stops at a close just above 72.74. If you want to play it that way. I mean, it doesn't mean, like I said, we can still fail. The key thing is the close, but you have to do that on the close because we got this right here at 72.71. So, but right now, if that's the case, and this comes into play, you'd be looking at back to the bias pivot, which was exactly where it went. And this was just a hair too long. So you go like this. Make that real clear. And if it breaks, because it hasn't broken, so this is just a potentially forming head and shoulders. That's why I've got the dots over there. If it were to break, though, we would be projecting for 71.30, which would come in with the 38%. You got the 23. If we break, we were here yesterday, and I said, wow, there could be a head and shoulders there. I mean, it's too early, but, you know, could be something. Well, now we're starting to get a form. We said, hey, if it does, we're going to fade against this. Well, we missed it by 6 pips. So once again, that'd be something to just keep in your cross things. Okay, so we're going to make resistance right now at 72.71. Very short term. Well, that might be a little bit too short term. If you're looking at for the out resistance, because doesn't mean we can't pop above it, let's keep it at the 73. We said support was going to be at 72. Let's keep it there. But this is starting to develop. Okay? So that's on the Kiwi. It's obviously still bullish. Let's see how we stand on a break. Okay, so we can take a look at the dollar Swiss. So, Jack had a question on the dollar Swiss, but he's already gone. So on the dollar Swiss, this is quite often I'll use the dollar Swiss as my contraindicator, so to speak, to the euro dollar, as opposed to looking at the cash dollar. By the way, on the cash dollar, we were looking for par 83 on the cash dollar. Remember yesterday? I mean par 92. Par 92, and the high was par 82, and that coincided with that 23%. But we kind of pushed it up to 92. Anyway, so I generally use this one, but the Swiss National Bank's been talking a lot of stuff about, you know, what they've been thinking of what's going to happen and how this could impact and what they're going to do. They said that about 10 days ago. That's why it's marching to its own drummer right now. And I haven't placed too much weight on how this thing's going to play out. We did talk about this yesterday. Wow, look at this. I mean, it's just consolidated in this tight range like nobody's freaking business. Look at that. I mean, when you compare that to what you see in the euro, you see, because it's just marching to its own drummer. So for right now, all I'm doing is I'm just only looking at it as support and resistance, and that's it. Because I'm not giving it any significance to what it's doing, because the Swiss National Bank has already come in and, you know, been mentioning their, you know, giving their 2 cents on the whole thing, what they're trying to just make sure that they keep growth stimulating. We're seeing the euro break down a little bit here. So I don't think anything's changed on the dollar Swiss. 99.30, par 61, and we're just stuck in a rut here. I mean, I said about the dollar yen that I thought, this was a couple of days ago, that I thought was dead money. I wasn't sure it was going to be. Now this is really dead money. But we got support 99.30, resistance par 61, and this thing's dead in the water. So that's all we got here. We're going to go and take a break, so nothing's changed there. And we're at break time. I don't want to miss a break like we did the last time we got behind, and we'll be back.